Good afternoon. In this video, we're going to go over this week's options watch list. Before I get into the watch list, if you're not in the room, you can find the link in the description of the video and in my bio section of social media accounts. Also, please like the video and subscribe to the channel if you haven't done so already. Now, this week is going to be interesting because we have a very, very big earnings week and we have FOMC. Now, I'm just looking at the economic calendar first to make sure nothing's coming up. Tuesday, let's see, we have consumer confidence at 10 a.m. Wednesday we have FOMC, which we'll have the statement. Then we have the press conference. So we'll have Powell. This is going to be probably a big mover. Then Thursday, 8:30 a.m. we have advanced GDP. Now Friday we have core PCE price index. So we get some data coming out, FOMC, and we have earnings coming out. So I'm not going to pretty much talk about any stocks because a lot of the stocks we watch and we play are going to be having earnings this week. I mean, this week is going to be do or die for the market. Now, Snap being one of the stocks that just released earnings, showing how horrible it was. Apple reducing its hiring, Google's having a hiring freeze, Ford laying off people. These are things you do not want to see before earnings, because if they're doing this before earnings, it's going to be bad. We have everybody, just what everybody is reporting this week. We got Google Tuesday after hours, Microsoft after hours on Tuesday. And then Wednesday morning we have Shopify, Boeing, Spotify. Then after close on Wednesday, which is FOMC day, we have Facebook, which is Meta. I can't stand that they changed it to Meta. I think that was the dumbest thing they ever did, in my opinion. My wife and I were talking about that yesterday, how stupid it was to take so long to brand Facebook and have it such a huge brand to change it over to Meta. I think that was pretty stupid. But anyways, then let's see, we have Thursday after hours, we have Amazon, we have Apple, we have Roku, and then we have some Friday pre-market. We have a couple of oil companies. That will be the oil companies, if they start showing massive profits and making massive money while oil is going up and everyone's freaking out, it's gonna end up probably being pretty bad. So it'll be interesting to see what happens. So like I said, I'm not even going to cover any stocks. It's not worth it. Too many earnings coming up that the market's going to react to that. And plus, we have FOMC. Now, a couple of things I want to point out is the VIX. Now, I was looking over the VIX before earnings, before FOMC. Now, the FOMC last time was June 14th and 15th, which is right here is the 15th, the 14th. This is the day it probably 14th, yeah, because I remember it popped. So this was the day before FOMC. We had a big down day, then it popped. Then after it popped, it started to fade. So definitely could see some action on before FOMC, because I was noticing that, usually it's choppy, because back here May 3rd to 4th, it's choppy. This is the day, the 4th, which is right here, the down day on VIX. But you can see right here, it's kind of choppy going into FOMC. But here, it wasn't. It was pretty volatile right here. So we'll have to watch VIX. Now, VIX likes to bounce off this 22 area. And now it did bounce off. What was the low on this one Friday? 22.41. We have VIX calls anyway, so I think that it's going to bounce here. It's going to be dependent on what the FOMC does. Are they going to raise it by 75 basis points? Are they going to raise it by a full point? What is interest rate going to look like? Not interest rate, inflation going to look like? I mean, what's the worst case scenario is they could be doing all these interest rate hikes, and inflation is still rising. And I don't know what the Fed's going to do if something like that happens. I don't think inflation is going to flatten until probably September or something. We'll have to see. But what I'm looking for is, I'm thinking that we're gonna, I mean, obviously everyone's gonna be short SPY, but I kind of think that we're gonna end up seeing what we've been seeing, that the day FOMC happens, that we're gonna get a surprise pop, and then we're gonna fade the next couple of days. That's what I'm thinking. Everyone is gonna be bearish on FOMC day. I'm kind of thinking that, and I'm thinking out loud, obviously, is that let's see, the 3rd and 4th, which is right, 15th is right here. You can see it popped a little bit on FOMC, then the next day it faded. Then on the 3rd and 4th, which is right, where is it, 4th, 3rd, 2nd, 3rd. Okay, this is the 4th. This is where they announced it. See, it popped here and it popped here, and the next day it faded. So this is what I'm thinking too, that we're going to end up probably chopping. We'll probably fill this 401 gap on the daily, maybe even get up to 410. And I wouldn't be a bit surprised if they try to pump the market a little bit going into FOMC. Now, I mean, obviously, I'm not saying that the FOMC to just grab calls and not play puts. Obviously, we're going to play both sides because we don't know what's going to happen. Bad news, SPY likes to pop. We're gonna play both sides. We're not gonna anticipate it's gonna pop and not play the other side. We're gonna play both sides and anticipate anything to happen, because the market can do whatever it wants. We've seen so many times in the past, even though FOMC day, when it should have been bearish and it just popped, and we'll be ready no matter what. But we do have this gap fill right here. We could end up just chopping a little bit before we actually have any significant movements. But we also got 410 right here. We get this big level right here. Would be surprised if we even touch 410. What is this right here? 405 on the 20 EMA on the weekly. And histogram is starting to go getting ready to go positive right here on the weekly. But like I said, I mean, you really can't predict where things are going to go, because you don't know how the market's going to react to the interest rate hike, what it's going to be. So the market has a tendency of looking at being optimistic on bad news and like, oh, it's bad but not as bad as we thought, and pop. So it's going to be very, very tricky. It's going to be a day-to-day scenario. We'll just play it day-to-day and see what happens, and that's pretty much it. I mean, we'll just have to let the earnings play out this week and just play what the chart gives us during the day. And hopefully it's a strong, volatile week. It's hard to predict what FOMC is gonna do, but the last two FOMCs, it's gone green, it's raged, and it faded on the Friday. We'll have to see if that does repeat itself. I'm kind of looking to see the put to call ratio right now is not that bad. It's high. It's 0.73. I mean, it's in the somewhat extreme range, but not really. I mean, if you look at the daily on it, that usually it's 0.80 has been the new normal extreme level for the put to call ratio. But I'm thinking that everyone's going to load puts for FOMC. It's going to end up popping. It's going to end up fading Friday. We'll have to see if that's what happens. But yeah, this watch list, not much is going to happen because of the strong earnings week and FOMC. So that's why you need to be in the room, and we'll just take it day by day and see what happens, and see where it leaves us. So that's going to do it for the video, and thanks for watching.